The markets opened moments ago with investors on edge after stocks had their worst day by far in 2 years. The Dow, NASDAQ, and S&P all went into a free fall yesterday. It is the fourth time the Dow fell more than 900 points this year alone, something that never happened last year. Investors continued to worry about inflation and the odds of an upcoming recession, especially after retail giants like Walmart, Target, and Lowe's all posted extremely disappointing earnings for the first quarter. Joining us now, co-anchor of CNBC's Squawk Box, Andrew Ross Sorkin, and columnist for Insider, Lynette Lopez. Lynette, I can't wait to get to your column, but first, what's going on with these big companies and these earnings reports, Andrew?
Well, what's really happening here is costs are going up. This is inflation writ large. We're feeling it. We're seeing it. Oddly enough, the consumer is still quite healthy. The consumer's out there. The demand is strong. This is what the Federal Reserve, to some degree, is trying to reduce in a way by making things more expensive, at least short term. But what you're seeing right now when it comes to Target, when it comes to Walmart, when it comes to Lowe's, and by the way, we saw this a little bit early on with Amazon, is just the costs. The costs of doing business are so much higher. The cost of shipping things is so much higher. We're seeing it in the price of gasoline. All of that is contributing to a situation where the companies have been eating some of that cost. So in a perverse way, prices actually haven't gone up as much as perhaps they should have, meaning Target, Walmart, they were holding the line on prices and eating the cost. That means that their margins, their profit margins have gone down, and that's what's hit the stocks. But what it also says is that it is very possible we're going to start to see much higher prices from those companies in the future. And then the question is, will that actually reduce demand because the customer won't be paying it anymore?
All of what Andrew's saying leads what Lynette calls to the summer from hell. In her latest column, Wall Street is heading into a summer from hell. Top investors say it's going to bring a near biblical reckoning to the market. Lynette writes this, quote, after years of inflating, it's becoming clear the everything bubble has burst. Since the start of 2022, the S&P 500 has fallen by more than 18%. The tech-heavy NASDAQ down nearly 30%. A punishing combination of still hot inflation, hiked interest rates, war in Europe, lockdowns in China, unprofitable companies facing reality, and recession fears is making it clear this isn't just a short-term drawdown. It's a pivotal shift for markets. She continues, unless you are a seasoned practitioner, I suggest you avoid looking at your 401k until next year. No one really knows where the bottom is, and no one really knows what's going to happen next. So you lay it out pretty starkly there. What are you hearing from people on Wall Street? What are you hearing from some of these companies about where we're headed?
Well, you know me, I don't like to be dramatic, but I am hearing that this is going to continue for months and months and months. And you have investors saying that the S&P could go down as much as 40%, the NASDAQ could go down as much as 80%. And that actually is analogous to the 2001, 2002-ish tech bubble that burst. We have and the tech sector is going to be hit the hardest here, too. And we have a lot of unprofitable companies in the tech sector that were just using debt to fuel growth. But when interest rates go up, you have to pay back that debt. And if you're not making any money, well, then you're sunk. And these are big companies. These aren't small companies. This is like Uber. That, you know, they also did things like WeWork did, where they came up with their own metrics to value how much money they were making. You know, WeWork had like community adjusted EBITDA, whatever. Uber makes up its own metrics to show that it's a healthy company. There's so many of these things going on in the tech sector. And because the market is now being more careful about the money and where it goes, well, they're all going to poof.
Oh, man. Is it just inevitable, Lynette, that a recession's going to happen?
I don't know if it's inevitable. You know, the stock market is the economy and the stock market's not the economy. You know, you have to remember that it's possible for certain sectors to have a really bad time without the overall economy going into recession. But we have so many factors grinding down on our economy right now. There's not just the Fed raising interest rates, it's commodities prices going up because of what's going on in Russia and Ukraine. We have, the issues in China with COVID, meaning that the supply chain is still very, very messed up. And we have, Americans are scared. They're getting more nervous, and when Americans get more nervous, they start to be more careful about the things that they're buying. And, people might have a hiring freeze at their company or, decide that they don't want to purchase certain goods, and that will slow us all down. We're hoping that the Fed can stick the landing, that the economy will just slow, not go into recession, and that, prices will lower and calm down as this, frankly, calamity of different events descending on the economy just kind of fades, hopefully. But none of that's going to happen this summer. So for the summer, hold on to your hats. The stock market is going to just puke.
So, Andrew, we've heard publicly now from the leaders of some financial firms that it's likely, not for sure, but likely that we're headed toward recession. What are you hearing from the people you talk to every day?
Well, I'm not going to take the other side of Lynette because I think she's right that there will be a puke, if you will, but I'm not sure it's going to happen this summer. In fact, some of the technical analysts are suggesting that it's possible that actually things could flatten out, be very volatile this summer. But then I think the real question is going to be what happens this fall. And there I think you are going to start to see a market shift, and it could be downward. Having said that, the market is always sort of is trying to prognosticate what the world looks like 12 months from now, 18 months from now, rather than what it is today. So it's possible that a lot of this is sort of being moved forward, if you will, if you can sort of put your brain into a bit of a time machine as to how to predict what that world will look like. And the truth is that when you look at where prices are today in terms of the stock market, things are pre-pandemic. In some ways that makes sense. In some ways it doesn't. Pre-pandemic was still a little bit of Alice in Wonderland, if you remember, because things were actually quite good, and some people thought they were too good. So there may still be some movement on the downside. But I will also tell you there are some people on Wall Street that are thinking to themselves, if you are playing this, if you will, for the long term, 10 years out, 5 years out even, that actually as these prices get low and everybody freaks out, that's when you're supposed to be buying. I'm not suggesting that, but I know a lot of people look at these moments and they think I should be selling. That's usually not the right answer either.
Okay, CNBC's Andrew Ross Sorkin, thank you. And Insider's Lynette Lopez, thank you both very much. It's